Hello again, everybody. It is Wes with Pikes Peak Trades, and very excited to give you another weekend video where I'm going to go over our main indices and ETFs and some of my favorite stocks that I'm looking at right now. And if you had watched last week's video, you would remember that I had pointed out on the IWM chart, on the hourly chart, the developing negative divergence on the RSI 9 and my caution that we probably would see some selling off this week, and that is exactly what we saw. Now, the degree of that selling, I think, was contained. I do think we saw an important day on Friday, and I'm going to go through that on the weekly charts. But just to begin, just wanted to turn your eyes to what we saw on that divergence that then turned into selling Monday and Tuesday. We had a bounce on Wednesday that I think caught some traders in some whipsaw because of the selling that then happened on Thursday. We can know that that really was just a short covering bounce. It was not a convicting move, and I think we did set some significant lows on Friday, and I want to talk you through all of those scenarios. So let me move to our weekly charts. And I had tweeted out on late Thursday, early Friday, my concern on SPX and QQQ that the weekly chart could actually develop into a bearish shooting star. It actually did not. So we did not close the week on the lows. We don't see that upper wick more than twice the width of the body. This really is just kind of a neutrally bearish, indecisive weekly candle. It did close significantly above the 8-week EMA and just right on that lower rail that has been acting as support really all the way back since late October, and certainly significant support here early in 2021. So I again would point out to you that developing divergence that eventually is going to catch up to us. That's why I do leave those bearish labels in red and also in blue on the charts, but my leaning is actually bullish. And so you can see that I think that we put in a 1-2. You'll see on the daily and the short-term charts that I think it just continued to nest a little bit. And I'm going to remain optimistic that we're going to stay inside this bull channel and we're going to get a good run into the summer months. Take you into the daily where you can see a little bit more detail. And I had indicated the possibility of this nested pattern. And so suggesting that we put in a significant low in the early part of March, my primary count here on SPX is that we have a 1, 2, 3, 4 that held above this key level of 38.81. Now, if that level is to break, I'm not immediately going to get bearish because I'd like to just raise the possibility of what if something extremely bullish and in a surprising way that would catch many traders off guard. What if this is a 1-2 and then this purple 1-2, which would lead us strongly up to then challenge 4,000 with smaller pullbacks along the way. So if we do get bullish resolution, it might initially be difficult to discern my primary black count from that purple count. We would then only know by the degree of the pullbacks. Shallower pullbacks that just keep grinding higher would lead us to a much more bullish resolution. Okay, now I just realized for the bearish count, that needs to be an X wave. My suggestion here for the bearish count is to make this line up with what could be happening bearishly on QQQ, that we have an expanded flat wave. Okay, so if that's going to be the case, I think we will pretty quickly on Monday see some pretty drastic bearish resolution. So on SPX, we've got to see the supporting rails fail. 38.81 has to go, and then it's got to get just right back into this down channel. So if 38.81 fails and we get a test here at about, let's say, 38.10-ish, and then another fail that puts us right back into the channel, of course, you've really got to say at that point, you have to really, really manage your risk and take caution. So 38.81 is that first line that we would need to be looking at. Notice the close on Friday, right in between the 8 and 21 EMAs. So kind of that neutrally indecisive candle here on SPX. That's on the daily. Into the short term here, could show you the futures. And I think this is a pretty compelling bullish setup that we could have a significant degree too low in place off a really nice triple touch off the bottom of this potential bull flag with just a short-term inverse head and shoulders. My suggestion is even if we do get bearish resolution that wins next week, I think we could actually see a pop on Monday, and the bulls would know to get out if there's rejection right in, let's say, the 30 to 30 40 area in futures that would then turn it down. And that's why I've got this blue count here that would still give it eventually a bullish resolution. But if that just fails, so we fail 38.75 and it moves back into this channel, that's when we could see the possibility of that expanded flat play out that I think would then actually take it into the S&P 3600s. But again, my leaning is that we get up and out, and on a back test that we actually get a pretty surprising bullish resolution that might catch some traders off guard. So here we see it on the short term, the suggestion that we put in that degree 4 low to get up and out of that channel would then put us into 4,000. And that's what we're going to have to see. That's the next big psychological level. So if you're frustrated by all of the different possibilities, then my suggestion is that EW is simply not for you. I'm not going to be offended. There's many, many ways for traders to be successful, but I like it because it gives me those invalidation levels. If we immediately tank, we got to be on guard for the red bear. If we test up but fail, maybe we can catch a lower low that eventually finds support. If we just move up, backtest, and blast off, those would be my primary bullish scenarios. So let's get into our Qs, and we're looking here at Qs on the weekly. And again, I think we avoided the most bearish candle, which would have been that bearish shooting star. It's kind of, I think, a neutrally bearish candle. It is out of the channel in between the 21-week and the 8-week EMA. So if we're going to see resolution strongly to the upside, we've got to see tech get back out. And you've been reading and hearing a lot about how the interest rates continuing to move up in a more rapid way, causing bonds to sell, is creating instability market-wide. We need to see that slow and then reverse. We actually do need to see bonds get a bid. We need to see interest rates slow their rate of increase and then eventually reverse if money is going to flow back into growth and back into tech. So we see here on the daily, everybody is pointing out this potential inverse head and shoulders. That is definitely the traditional chart pattern that needs to take place. The daily candle is leaning a little more neutrally bullish because of the positive close here on the Qs. And I would point out that clustering of the daily MAs. To get the resolution, we need to see a strong movement up and out of those MAs. So would it be possible a big Monday gap up that gets it up and above those with a little bit of testing, maybe on Tuesday? And you can see I've got here the bullish resolution would put us strongly back into that bull channel. Let's look at what that would have a chart of on the short term. And I had also tweeted out this potential bull flag that I think we did get up and out of at the end of the day Friday, right here with just another small bull flag. This is what I think could be the springboard to get us back up towards that bull channel. Okay, now we have to definitely be on guard. The most bearish counts are still in growth and tech names because they've been beaten up the most. If we see failure in the 316 to 318 range, then we've really got to be on guard that we could see just a waterfall plunge. Okay, so we're certainly by no means strongly resolved either direction from a probability standpoint. I am anticipating we are going to get a bounce Monday. And then what happens after that, whether it is a gap and crap or a gap and go, is going to be able to distinguish these bullish from these bearish counts. Other weekly charts that I think are really interesting for us to see, I want us to go through the big tech names. So Apple. Now, Apple does not have a great look on the weekly. I could understand that bears would say that candle right there does look like a bearish shooting star. That is not the case widely spread throughout tech and growth names, but we simply have to be aware that we have to leave some of the red bearish counts on the table. Looking into the daily, a little more optimistic. I actually like that daily candle there as an inverted bullish hammer. So it kept a potentially nested 1-2. I'm going to remain optimistic that Apple is going to get back out and participate in some leadership and challenge this open gap from the bearish move. Again, you could have very tight stop levels and just understand if 119 gaps down and breaks, you probably need to get out of any of those bullish positions. But let's for now stay cautious, but keep an open mind to some of these possibilities. Looking on to the short term on Apple, we're going to see what I again think is a little bit of optimism. It moved up on Tuesday, and I think just back tested on Wednesday, Thursday through Friday. We didn't get strong resolution up and out of it, but could that be enough, like cues for the inverse head and shoulder, to give that the springing launch into a more bullish pattern? So other names here on the weeklies. Let's look at Amazon. I had also tweeted out Amazon's weekly here. Let's see, that's the daily. I think this is the weekly. So it's weekly. Again, I think kind of a neutrally doji candle, but I would like to point out it is a weekly higher low, higher high, closing above the 34-week EMA. Amazon had a really nice close on Friday. And these, again, clustered EMAs are the ones that we have to clear in order for Amazon to resolve bullishly. So the count I would suggest is a minor 1 with a minor 2 that hit in between the 50 and 62% fibs. A nice looking bullish candle, but it closed right at 8-day EMA resistance. So bears would have taken that as an opportunity to short, thinking that we've bumped right back up against EMA as resistance, and we can short, anticipating what again I think would be a massively bearish move if it happens. Bulls are thinking it's time to gap up, get above the 3090 pivot, get back into the 3100s, and start attacking these gap areas. And on the short term of Amazon, you're going to see there are just multiple gap areas above 3173. Now, that's a long way up there, but that's eventually the target that has to be conquered. Do we have kind of another spread out inverse head and shoulder? It's a little bit choppy back into this bear channel, but you can count a nested set on a small degree in there. So cautiously optimistic for Amazon, but again, if that channel fails and we move back down certainly below 3016, you got to be on guard for the red bear. All right, so we want to see the relative strength and take a look at Facebook. And Facebook here with a massive weekly move, up over 8% out of this diagonal down rail. And if you want to, lean bullish here, you got to look to Facebook and say either this is just completely a fake out and we're going to have resolution down, or we look at this as leadership and we're going to see Facebook make a new all-time high. And that's my suggestion within Facebook, is that we are actually within a very powerful minute 3 of minor 3. And so that resolution to the upside, I don't think is done. And if I show you then that on the short term, I think we've got just another bull flag. So if Facebook pops up and out of that bull flag, tests it, um, I've got to be compelled to enter because I'm even entertaining the possibility of an even more bullish. So minute one, minute two, minuet one, minuet two that would take Facebook to very, very surprising targets within this channel. But it is channeling well, it is charting well, and is this the name that is leading us to say there could be a massive recovery in tech? Okay, want to show you two more because I think it is important here for us to consider. We would need broad participation for the bullish case to play out. And we've got Microsoft. I think Microsoft put in a 1-2, not a strong move at all, kind of as part of an ending diagonal here that you can see up into the summer and into the short term. On Microsoft, you're going to be able to see what I think, again, is a potential inverse head and shoulders. Like a lot of these names, down channel resolution has to occur. Breaking up and back testing would be your opportunity, and that would occur right around maybe the 231 area. If that happens on Monday, there's, again, kind of staggered resistance up, and Microsoft is one that hasn't strongly said that it's ready, but it does need to participate if we're going to get the bullish resolution. We want to also look at Tesla. So Tesla on a weekly perspective, Tesla put in an inside week. So an inside week right at the mid channel, just barely above its 21-week EMA. We take you into the daily and we're going to see a nice bullish hammer. So I am optimistic that Tesla, like Apple, can get back up and show some leadership into the short term. Tesla has its own potential bull flag that it needs to move through. You're going to see that on the short term. So moving up to the mid channel first and then attempting to get out. We've just got really active touches in the 700s, and that's exactly the area that it needs to move up to break out. And the target that's remained on my charts for a very, very long time is for it to get into the mid 900s. That's a very aggressive move. That's like a 40% move. But as I'm suggesting, we've got time here. This doesn't need to happen in a span of a month, 2 months. This could work itself all the way out into the summer months. Okay, so now let's get into small caps and financials. Just want to make sure that we get a good picture of those. And I do want to point out with IWM kind of a significant degree change and what I think could be an acceleration channel. So it had been moving in this channel very well up until right at the beginning of 2021 when it just moved up and out. And so I've turned that into an acceleration channel. And again, I've got the possibilities of the bearish blue, even more bearish red. But I think IWM actually just put in a 1-2 that projects very bullishly up. I think small caps will continue to catch a bid. A lot of your growth tech names are in IWM. They're in that small cap, mid cap space. And so I can see the possibility that we just see great continued performance from IWM. It certainly outperformed on Friday, and I already showed you that ABC down into that move. So I think over the next month, we could still see IWM with really strong performance. Want to make sure that we do talk about financials as well, because we won't see a broad-based rally if financials don't participate. I'm just suggesting that maybe they don't participate to perhaps the outperformance that tech and growth can do. But I simply see it grinding up in a minute 5 of an intermediate wave 3 and showing you that on the short term. Here's the 60-minute. I think we just put in a really nice expanded flat down to a low. That would have occurred early on Friday. And I think just a grinding move up would make some sense here in financials. Got a lot of individual names that I want to show. So let's talk about Boeing. And I think Boeing on Friday just filled out the acceleration channel. So double support right at this rail. And I had been holding Boeing common stock. I did finally pull the trigger on some options here. So I really liked the combination of a 38% fib at a double rail support. I think Boeing could get into the 280s quickly. It's possible that these waves need to actually be going up here into its acceleration channel. But of course, I'll adjust that as we go. On the short term, we're going to see that potential back test. I haven't put the acceleration channel on there, but this would just be suggesting that 280 in Boeing would be my next target over the next 2 weeks. You've got to love what DraftKings has done. So take a look at DraftKings. Strong outperformance and relative strength. And I think DraftKings is just marching up really bullishly in right within an intermediate 3 of primary 3. So I am a long-term stockholder here on DraftKings. I want to introduce the possibility, like Boeing, that we actually have an acceleration channel in the making. So a couple touches on the top, couple touches on the bottom, and it's possible that these subdegree waves need to move over into this much more aggressive channel. So the timing of it, well into the 80s, I showed you that those further out targets on the weekly. I eventually have DraftKings strongly into the 100s into the summer. In the short term, I think we had opportunities to buy these rail dips. This would have been on Wednesday, on Thursday, and again right at the open on Friday, and then just an awesome move. And again, I see it moving strongly up, and don't see any reason why you shouldn't doubt that it couldn't. I want to show you FSLY. So I really like the possibility here of this, not only an inverse head and shoulder, but also a nice bull flag on FSLY. I get you into here the short term. Here's that inverse head and shoulder. This is a bull flag within a bull flag. So it is on the top of my list. If we see that up and out of this small bull flag, that would be about 72. And then we can attack this MA and get up and out at about 73. I would be much more aggressive here in thinking about some options in FSLY to get it out maybe into the April-May expiry. Lots of other names. This window here has my favorite setups. I really still like Netflix, and I see Netflix in a wave 3. I see this nice potential bull flag that's very active top and bottom. Looking to the daily here on Netflix, it held 2 days in a row. It's 200-day MA and what I think is a nested 1-2. I'm optimistic we could see Netflix into the 570s by the middle of April and eventually by summer into the 600s. And into the short term here on Netflix, you're going to see we're approaching that mid-channel, and with the possibility there of getting into the 700s the 570s by April. I like the semiconductor space, and I like the possibility here of both Netflix and AMD. So getting in, I should have said NVIDIA and AMD, getting NVIDIA back into this bull channel. There's the weekly chart, and then showing it here on the daily. It still held a nested 1-2 right beneath its 80 MA. A big gap up would conquer that. Into the short term here for NVIDIA, I see a nested set of 1 and 2s. I really like NVIDIA moving into the 550s, let's say, by the end of the month. Also really like ROKU. So ROKU with an inside week. We got an inside week at this mid-channel back above its 21-week EMA. And I do have a target on ROKU for an all-time high into the 500s. Obviously, we got to reclaim the daily MAs. But I like that bullish daily hammer. I think we could see ROKU challenge 400 quickly. and show you that now on the short term. A really interesting triple zigzag. These are rare, but we've got a triple zigzag pattern here that I think set that low on Friday, 5 waves up to a wave 2 down, and I think that could be the pattern that we're looking on ROKU to get it out of this bigger down channel. Last one I'll leave you with here is SE, and I do like this as one of the leading names in the e-commerce space for one last push up to an all-time high. I think we saw that low that was set here on March 8th. I think we saw a double bottom low that was set on Friday. We saw it close pretty strongly green. And I could see SE moving up really nicely here once this short-term chart comes in into the 270 to 280 range over the next month. Okay, so obviously you see my leaning is bullish with the realistic chances that we do get some bearish resolution. As always, it's exciting, and happy to be with you, trying to help you navigate. Again, as I've indicated, and probably the best picture of this would be for me to take you back here into the short-term SPX chart. If the multiple possibilities that we have to entertain are frustrating, okay, then just don't follow Elliott Wave. And my suggestion, though, is that we need to be embracing multiple outcomes for risk management, for confirmation, for invalidation. And so I'll be staring pretty closely at the futures chart here on ES Minis and also on the S&P to guide us through, especially early. I think we'll be in for an exciting week. So I wish you a wonderful weekend as always. Welcome the questions and comments on Twitter and YouTube. Have a wonderful weekend, and look forward to seeing market action this coming week.